So hello guys, I just wanted to talk about how you should approach learning trading in 2025 as a beginner. So I made a quick slides, so we will quickly go through them. I hope you like the title. In trading, in comparison, it mostly like Sudoku puzzle. So before we discuss that part, the first major question that I should answer is, should you start trading in 2025 and why? So I've attempted to answer that. I mean, in many ways, for many reasons, it's the right time. And looking at all these pending situations like AI and everything, trading can be a good side income or a full-time job as well, depending upon how you approach it and if you can make it in trading. So as my slide says, markets are faster, more liquid, and more influenced by smart money these days. And AI, algorithmic trading, and massive retail interest have changed the game, and that's really true because you can see there are much more interest in trading now than ever before in past. But since the name of the game is patience and risk management, which has not changed, and if you have heard about trading in past, you may have heard about the indicators. We will learn why you should not use them. I mean, you need couple of them and that is all. Indicators never really tell you when to buy or sell. They just are used to measure the market moves, and if you're using indicators for any other purpose, you will mostly learn why they do not work. And also 2025, it's not too early, it's not too late. I've seen like even people 16 years old, 18 years old people are trading these days. So it's never too late. Even if you're 30 years old, 50 years old, it's never too late, because people of all ages are trading actively these days. So I wanted to compare it with this Sudoku because I do not want to leave a shadow of doubt. In trading, either you have a trade or you do not have the trade, but the process remains the same. You look at numbers, squares, and things and compare and find out the next move, the next step, the next number. You fill the next square. Process is almost same. Going through these slides, you will realize that. So let's move on to the next slide. And the key part here is you will need a discipline, a structured plan, and a humility to learn the puzzle fast. It's very important. You should pause the video and go through the slide and learn it in detail. I spent quite some time in like making this. So here is the secret sauce. The first and most important thing that you require is to fix your mind, because your mind is the best tool that you have, that you will be using to win anytime in anything of your life, whether it is an exam or a game, maybe cricket or badminton or anything that you like. You will need your mindset to be in the right, working in the right direction for you to succeed. So the first and most important thing, psychology. First of all, you have to understand that trading is not gambling. Like most people think that it's like gambling. Recently I spoke to a friend of mine. He thinks that markets move on their own because of the buy and sell pressure, but he actually does not understand that the markets are already rigged. One or more algorithm runs the market. So the main idea is like the planets moving in their own trajectory, in their own circle. They have their set speed. So that's how scientists find out that when they can leave Earth to reach Mars. I mean, they can mathematically calculate it. Since their trajectory and speed and everything is fixed, it's easy to calculate that when the mass is going to be in next 365 days. Suppose they can find that out easily. So that is how trading works. You can find out when the next trade is going to form, but to get that kind of proficiency, you will have to learn a lot, and you will have to understand like all the ingredients that involves in trading. So first one is fixing your mind and thinking the right way. So first, understand that trading isn't gambling, it's full of logic. Just like the great Sudoku puzzle, every move has to fit. In this video, I will show you how to go from zero to pro in trading step by step. And along with that, I will grow my own trading style as well, try to improve it. So this is the kind of journal that I'm creating for myself and for others as well who are interested in it. So I can watch in future as well. So, and I enjoy my videos. Imagine trying to solve a Sudoku puzzle blindfolded. That's what the most beginners do in trading. I mean, a few days ago, a friend of mine bought something and then came back to me and asked me why he was charged a huge fee for that. He did not realize that rather than buying a stock in full, he actually took a trade in it, and there was a trading fee involved in it. So you have to get into this game with information. Without information, you will lose. You will make mistakes. You will have to get the basic understanding, and I will tell you how and where you can get it in this video. Approaching the market is like sitting down with a giant Sudoku grid that starts with obvious, find the pattern and never guess. So like you can see the Sudoku puzzles on the side. I mean, the numbers are fixed. You will have to find the next number. The second Sudoku puzzle is a thermometer Sudoku. If you haven't tried that, you should like Google about it and try it. It's one of the most interesting Sudoku puzzles you will ever come across. I mean, in thermometer, numbers should be either ascending or descending order, and you can see the shadowy thermometers drawn there on the Sudoku. So it's very interesting. Something, if you haven't heard about it, you can try that. So just like in Sudoku, a good trade isn't forced. It emerges when all the pieces align. Do you see how powerful that statement is? I mean, if numbers does not align, you will might come up with the wrong number for the Sudoku puzzle. Similarly, in trades, if you do not calculate everything right, you might take the wrong trade and lose. So now the most important question, how to start. I mean, that's the whole video is about, how to start. Firstly, I wanted to confirm that trading isn't gambling, because that's the biggest question. Like, if it actually works, if it is actually possible to make money. Because if you check the data, 9 out of 10 people lose money in it, and I will tell you why. I have a separate video planned for it and how to avoid it. So 2025 is an incredible time to begin your trading journey, but only if you approach it the right way, which is the whole point. Starting now means you are not too early, not too late. You are on the right time if you commit to learning the approach, not just chasing money. So the most important part of learning anything, you have to focus on mastering the craft, not the end result, not the fruit. You know, in trading, people look at like rich people and money and everything. So you think about getting rich first before learning how to trade, before understanding what a handle or pip or what a risk management is. So you have to focus on money the least and try to master the craft, the process, which will lead you to taking a successful trade. And to learn that smoothly, when you have not tried trading, you have just heard about it, I recommend first try to invest into the stocks and slowly develop and learn about things. Excuse me. So being investor first and trader later is a smarter path. It will really help you. The transition will be the best of its kind. That's what I think. I mean, this video represent only my ideas. It's not rules set in stone. It's just my observation, my rules. I have not become filthy rich yet. So, I mean, I'm in the process. So, I mean, you can take it as my own opinion and see if you like it as well. When you first invest, you get familiar with market cycle, because you will learn something about cyclical things. Things repeats after a certain period of time. That is when you design your trades. So similarly, in stock market, there are cycles, sector rotations, earning season. That's when the major moves comes, and that's impacts your trading results as well. So being investor first is the smartest choice in the game, and it teaches you to hold them through the market noise, stay calm during drawdowns, and think long term. So that's the most important part, to learning how to stay calm during the drawdowns and learning how to hold. I mean, in the beginning, I used to close my profitable trades too early. So that's not the right idea. Not the right thing to do. But you can, if you start investing, you will be you will stay invested in a stock for a long term. Like the stocks are the very first stock I bought like 5 years ago. I'm still invested in it. I have not sold it. So, and I'm planning to keep it until I retire. Maybe until I'm 60. So that's the whole idea. You learn to stay invested for long term, and it teaches you to hold through the market noise. We have gone through that. Investing encourages research, reasoning, and long-term planning. Absolutely. So that's what all the ingredients that required in trading as well. You need to research. You need to find the reasoning behind a trade, when it is forming and when it is not forming. When you should take the trade, when you should not take the trade, and the long-term planning. You get used to making decisions and seeing results over time. So it's very important. Like you will not succeed every time. So since you're not going to take a good trade every time, it's important that you learn how to handle the failures as well. So that's the most important part. Start with investing to learn the rhythm of the market. Then when you transition to trading, you will have the psychology, patience, and context most beginners like. That's very important thing. You should pause it and read it again. So how you should start, that's the next step. I will tell you how I started. That's the way you may choose to go to babypips.com. It's a website. There is a Forex course, School of Pipsology. It's really amazing graphics, childishly amazing, like even for a child. I mean, it will looks amazing. So if you are a complete beginner looking to learn trading from the ground up, babypips.com is one of the most trusted and beginner friendly websites. It offers comprehensive step-by-step curriculum known as the School of Pipsology. It teaches you the very basic of the trading from the basic, and you will get like few tests as well after every lesson and everything. So you can like really enjoy the process. There are amazing graphics, cartoon images to like entertain you, to even suppose if it is showing you the difference between the kind of amount being traded in an Indian market and a Forex market and a US stock, like US market and US Forex market. You will see the amazing graphics and you will really like it. I still use some of them as the emoticons in my phone as well. Whether you are planning trade Forex, crypto, or just want to understand the price action better, babypips is an ideal starting point to build your solid foundation trading. That's really amazing website. You should visit it, babypips.com, and go to the Forex section. And in that Forex section, you will learn everything: what is pip, what is pipette, what is handle, and every other basic thing. It has course on like crypto, Forex, futures. I basically went through the Forex part, so this is why I took the screenshot for the Forex School of Pipsology. Now, what to trade? So since I'm from India, I initially tried Indian market. So Indian stocks and indices, but I have not traded Indian indices or stocks. So but the options are like Bank Nifty, and Fin Nifty now. So The main problem with that is I have night shift, or sometime I have rotational shifts. So it's not certain. Either I'm sleeping in the Indian stock market time, or I'm in the office. So I miss that. It's only a window of 6 hours and 15 minutes, and I easily miss that. So that's not ideal for me. So I need something, an alternative, much better than that, that can like uh, allow me a chance to trade when I'm comfortable. So now, what are other options? Forex pairs and futures. Among those, I prefer futures, obviously. When deciding to trade, it's important to consider more than just profits. You have to think about market across flexibility or personal routine. Personal routine, matching it with personal routine is very important. Take Bank Nifty for example. It's high volatility index with big moves, but it's only tradable for 6 hours and 15 minutes. Strictly within Indian market hours. If you miss that window, you are done for the day. I mean, that's really a deal breaker for me. I cannot trade Bank Nifty because either I'm asleep or in office. So compare that with Forex pairs, NASDAQ, S&P, Dow futures. These markets are open almost 22 to 23 hours a day, 5 days a week. That means you can trade early in the morning, during the lunch, or even late at the night. That's really true. So either I find the Asia session or London or US session. So mainly I trade London because that's the time I'm aligned to. That's when either I'm up or I'm not in office. So that's the best time for me. You're not locked into a single time zone, and the flexibility is huge, especially if you are balancing trading with your work or study. Since I have not quit my job because you know, since everything is in process, so I have to manage it with my job. And I've recently started trading. I do not have much experience. It's been around almost a year, like 9-10 months. So I have to manage my job with the trading. It's very very hard, extremely difficult. Like stress of trading and the office, it gets too much sometimes. Last whole week I was sick, bedridden, and I could not do anything. So it like takes a toll on you. So if you want structure and local familiarity, Nifty, Fin Nifty, Bank Nifty can be great. But if you value global liquidity, which I do, round the clock opportunity and ability to trade when it suits you, then Forex or the future might be a better path. I mean, not might be, it is. Forex and futures, I love them. Not Forex, but futures. I personally love to trade NASDAQ or S&P, not Dow. I call it dirty 30. I'm So moving on to the next slide. So now when you have selected what to trade, and you have like cleared that you have to be in the right mindset, what kind of broker you should choose. So there is one important point that I missed earlier. First of all, you should have a consistent source of income that can like fund your trading losses. Because like a game of chess, you will not be winning the very first game or very first 10 games or 20 games. So it has a learning curve, and you will have to submit to it. So you must have a job, a salary, a income, or business income, so that you can manage if you lose initially. So currently I'm not talking about that because we have not reached the point when we take the trade. We are just setting up the ground rules for what to do, when to do. Like you will be studying for at least 6 to 9 months, and then you will be putting real money. So there is a lot of time to discuss that. Broker is one of the most important factors. This broker is the only reason why I don't trade Forex. I mean, I've been trading MetaTrader, but I've been using MetaTrader earlier. That's what I started with, but they have like very high spreads. So in baby pips, you will find what spreads are. It's like when you are buying, you are getting like 30 or 40 handle expensive. Like you will learn about spreads in the baby pips, so you'll understand. So like from the point you are buying, it will be bought after 20 or 30 handles. I mean, sometimes I target 30 handles as a trade, so you are losing that. And that happens mainly when there are like big moves about to come. So most of the time your broker is like killing your profits. So that's why I do not trade with MetaTrader anymore, because of the huge spreads. Some like if you have a huge account, like five, like 100,000 or more than that in dollars, then the spread may go down. But since even I tested on demo, it did, but still I did not like it. Sometimes like Forex pair, they make some wicks and take my stop losses out, and like when stop loss is tight, I do not like that. It's like every broker has a different like closing price or something like that. This is what I hate about Forex, but you will get to know about it when you will compare other brokers. Selecting the right broker is one of the most critical decisions as a beginner trader you can make. Your broker acts off as your gateway to the market, and poor choice can lead to unnecessary fees, delayed executions, that's another important thing, or even security risk. A good broker, yeah, they may run away, after committing frauds. So a good broker should offer low and transparent fees like TradingView related brokers, fast and reliable order execution, user-friendly trading platform, strong customer support, proper regulation, and fund security. I mean, fund security is one of the most important thing after spreads. So remember, your focus should be on learning and improving, not battling hidden charges and bad executions. Choosing a reputable beginner friendly broker sets the foundation for the smoother and safer trading journey. So this is why the broker is important. And I started with MetaTrader, learned why it's not good for me, then I switched to the prop firms, and I will make videos about prop firms, how to use them, which one to use. So it will be in my next few videos. This is a series of the video, like very first video of from the series, in which I'll be explaining how to like start and transition into trading and take good trades, and hope you will enjoy it. So now comes, like, you have selected the broker, added funds. Breaker is one of the concept in trading, so I use that. So you have selected brokers, you have learned about psychology, you have learned the basics about how to take a trade, you have learned some technical analysis from baby pips, like from beginning to the advanced level. Now what you need to take a trade, you need a specific strategy. What is that? I mean, at a certain time, market price will move in a certain direction. You will need to decide when to take the trade and how long you should be in the trade. So that's very important too, having a trading strategy. So, and having the right risk management with that strategy to succeed. Generally, I follow my formula about time then price, because at certain time, at the fixed time, the fixed certain kind of momentums comes into the price, so that's when I try to take the trade. I will be explaining this further in upcoming videos. In my charts I will be showing what kind of strategies I have. I will be adding few of them in this series as well, so you can at least have an idea and you can enjoy it. So one of the most overlooked keys consistent trading success is to having a well-defined setup and sticking to it, because if you do not have a setup, the idea is to find a setup that is repeatable, that repeats almost every day or at least 3-4 times in a week, and then you can take the same trade every week 2-3 times and make good amount of money. And all the time, every day, the trade setup does not work. So what you can do, what you expect is at least you should get 50 to 70%, 50 to 60% of win rate. Like if you're taking 10 trades, at least 6 times the trade should work. I mean, that's the basic idea. On 4 times you may fail, or 5 times, so still you will be in profit. And then a setup is more than just a pattern or indicator. It's a structured approach that aligns to your entry, exit, risk, and market condition. I mean, in setup you decide that if you take, like, risking $100, you are making $300, and how many times you are doing that in a week, and when you are doing that, how many times in a week. So that all depends upon your strategy, and it's very, very important. After making the strategy, you backtest it on different tools. You see in past when it has worked, when it hasn't. So that's a very important thing as well. So over time your setup becomes your edge, which is true. Consistency does not come from predicting every market swing. It comes from repeatedly executing a high probability setup with confidence. It's like I explained the planetary momentum. Suppose like NASA has to, or ISRO has to launch a satellite or rocket from Earth to Mars. So they decide the time, and then they decide where Mars is gonna be after when. So that's how they decide the launch dates and everything. So that's how you have to do. You have to like find the right time and the price, and on the basis of how the market momentum is, and news related things impact the market price really well. I will create another video about how news impacts it. Mostly big momentum comes when there is a news. You can check forexfactory.com, which is like the best platform for the news. And let me show you. No, it's not working. I will like add it later or in the next video. Once you have the strategy, you must uh, journal your trades. Even if you're back testing, if you're seeing if your trade is working or not, you must journal every trade, because that's going to be the best uh, guide, best book for you. In future you can see when you took the trade, what mistakes you made, what you can do to fix it. I mean, any like measured and recorded growth is the best kind of growth. I mean, it's a kind of scientific study about it. I've read some articles. I don't exactly remember all the details or who said it, but any recorded and measured growth is good. So your trade journal, the mirror of a professional trader. If you're not just if you are just starting out in trading, one of the smartest habit you can build early in journaling is journaling every single trade. It may seem simple, but it's incredibly powerful. Your trade journal is more than a record. It's your personal roadmap to becoming better. I mean, just knowing that where you are making the mistake, where you can improve, is such a huge thing. I mean, you can use that and you keep improving yourself. That's what I have done. uh, I probably have shown my journal in some videos. I will show it again in future videos. So I will make a video about my journal as well. It's really cool. When you write down your reasons for entering a trade, what setup you used, how you managed it, and how you felt during the process, you start seeing clear patterns over time. This reflection helps you understand what works, what doesn't, and why. Instead of feeling lost after a loss, you have all data to learn from. I mean, that's you can see how amazing this is. I mean, the best trader don't grow just by watching charts. They grow by analyzing their own decisions. So, if you truly want to improve, don't skip the step. Your edge begins with your ability to learn from yourself, and your journal makes that possible. So, that's where my slide ends. I'm sure there are that is left, plenty that is left to be said here in this video. Plenty that is not in my head right now, but I will probably add that in the next video, and we will see how it goes from there. Also, I did try to I'm starting this series, and I will add videos every now and then, so you can enjoy it. As a beginner, I'm sure you're going to love it.